In this session, let us look into some supporting or source documents. Number one, we'll see what is cash memo. So here you see on the screen a format of a cash memo. So cash memo is basically a document which is used when the trader sells the goods on cash. Okay. So when a trader sells the goods for cash, he gives what is known as the cash memo, and when he purchases the goods on cash, he receives the cash memo. So the cash memo will contain details like what is the product that is sold, okay, and what is the rate per unit, and what is the total value, fine, and it will also have the address of the person who is selling it. It may not have the name and address of the person who purchases it, but it will have the name and address of the person who will sell it. So cash memo is basically a document which is used when the goods are purchased or sold on cash. Next, we'll see what is invoice. So I'll write here, we'll see what is invoice, or commonly called as bill. I'll show you the format. Yeah, here what you see is the sample format of invoice. This is used when a trader sells the goods on credit. When a trader sells the goods on credit, he prepares what is known as sales invoice. This is known as sales invoice, and this invoice will contain full details like what is the amount, okay. It will also contain details like terms of payment, like when you should pay, because it is being a credit sale, when you have to pay this, right? And it will also contain details like a name and address of the seller. It will have details of name and address of the person who purchases it, that is the buyer. Then the terms and conditions like the buyer is entitled to 5% cash discount if the payment is made within 30 days. It means the credit period is 30 days, but the buyer will have a cash discount if he is going to pay within 30 days. So the sales invoice will give you the details like what is the amount, then the terms of payment, the name and address of the seller and the buyer, right? This original copy, fine. The original copy will be given to the buyer, and the duplicate will be retained with the seller for making entries in the books of accounts. So this is the process that happens on the seller end. Similarly, the buyer, okay, when the trader purchases goods on credit, he receives what is known as a credit bill from the supplier of goods. And what you have seen is the standard format of invoice. And at the bottom here, what you notice, E and OE, it is called as errors and omissions expected. It means if there is going to be any error in the invoice, the same has to be adjusted.